an effort to boost consumption that's been dented on account of high interest rates. The Reserve Bank of India and the Finance Ministry are looking at various options that could result in cheaper loans for specific sectors like housing and auto. What exactly is in the works? Our policy editor Supriya Shrine joins in with exclusive details. Supriya, everyone's been talking about the fact that the government has limited and the central bank has limited elbow room to ease rates. So what's the strategy now? What is the government and the RBI working on?
So we're given to understand by people in decision-making capacity that the RBI and the Finance Ministry are actually weighing a special window, a window that they like to call funding for lending, which essentially means that for specific loans, for say home and auto that the banks do give out, they can have the option of cheaper refinancing from the RBI, and this cheap refinancing can be anywhere to the tune of 1 to 2% lower than market rates really. What is the big rationale and why is it being used? It was first used during Y.V. Reddy's tenure to really boost consumption. That was the time the whole global crisis was unfolding. And just to boost consumption, then it was used for the first time in Y.V. Reddy's tenure only for housing though then. This move is now being used because the government does realize that high interest rates, which cannot possibly be tweaked or brought down by cutting the key policy rates, is denting consumption. And to boost consumption, this window can perhaps be used because the moment there is cheaper refinancing available for banks to avail, it will result in cheaper home and auto loans. It will perhaps put the whole virtuous cycle of consumption back. Consumption will mean higher demand will mean production. I think one of the reasons why the government is looking to do this also is to boost production. And if you look at the two sectors, real estate and auto, both sectors reeling under slowdown. There have been various reports on the housing sector, how there's unmet inventory that's really sitting, piling on real estate companies. And as far as auto is concerned, the worst slowdown that one has seen in Motown. So this window, which is a special window, will perhaps be used to refinance cheaper loans specifically given out for housing and auto. It is in the works. It is being debated upon both in Finance Ministry and RBI. But by the looks of it, it looks like this is inevitable. It will be coming. This also gives you a sense that the RBI has very restricted elbow room to cut key policy rates. So there will be a lot of tinkering, tweaking happening to bring down real interest rates. And this is perhaps one of those such moves.
Supriya, however, what could be the challenges to such a move?
You know, the big challenge perhaps could be inflation. I mean, any amount of excess liquidity in the system, any amount of extra liquidity in the system will stoke inflation. We saw WPI inflation at over 6% levels for the month of August. Can the government afford that? The answer to that is no. But some of the people who are going to take a call on this that we spoke to when we put forward this question, that this is going to be an inflationary measure, inflation stoking measure, they believe that high inflation is on account of food prices, which are over 18%. That is on account of onions, which comprise 237% of the total outgo. But the fact really is that industrial inflation is sub 4%, is around 3.75%, and decision makers believe they can go ahead with it. Of course, planners of this scheme, people who do not believe in this, also believe that this will stoke consumption. This is going to lead to a consumption-led growth and not an investment-led growth, something that India can ill afford considering our inflation has been sticky. But proponents of this policy believe that they can go ahead with it because A, it is going to kickstart consumption, and B, this is not really going to stoke real inflation, inflation that's largely on account of food prices. As far as industrial inflation is concerned, that is manageable.
Right. Supriya, I know probably only one man has an answer to this question, and that's Dr. Raghuram Rajan. But how soon can we expect a possible decision on this? I guess it would be too premature to talk about it happening in this week's credit policy itself. How much time do you think it will take before the government and the central bank arrive at a decision on this?
I think you hit the nail on its head when you said that the only man who has an answer to this is Raghuram Rajan. But we've seen a whole host of dialogue happen between the RBI and Finance Ministry ever since he's taken charge. So people in finance believe that this should happen soon. I don't see this happening in the credit policy on the 20th. I think there will be various other measures that will be deliberated upon. This is still in discussion stage, but this is in active stages of discussion. This is being actively weighed upon. They do believe, and there's immense pressure also from the industry. There's immense pressure from Motown, which has been asking for a stimulus package, one that the government can ill afford, one that the government cannot give. How does the government save the real estate companies? That is another bubble that could be bursting, and that will have a contagion effect on the larger economy. So this is being very actively debated upon. One will perhaps see this happening, but without putting my neck out on the line out there, I don't think it can happen on the 20th of September. But yes, it is in very active stages of discussion, in very advanced stages of negotiation between the RBI and the Finance Ministry.